Thank you all very much for joining the Pilot Insure webinar today on this Monday, the 26th of July. Congratulations on taking this step in controlling your future. Well done, well done. Today we've got a wonderful lineup by a couple of experts in our industry, not only in the investment industry, but as you will see, a thoroughly comprehensive offering which Pilot Insure brings each and every one of you as not just stock standard investment advisors and advice. We've actually going to put the building blocks in place to show you what it means to be a wholehearted and a comprehensive solution to building wealth and to securing your retirement and getting going in a really, really good vehicle in the next couple of years. Okay, so as you can see there, the agenda for today is that we're going to introduce Pilot Insure and this new offering to you. That will be done by Frans, our founder and entrepreneur, Chief Visionary Officer of Pilot Insure, Frans Smit, who will lead into a presentation by Rob Yates. And Rob Yates is a business coach of 17 years. It is certainly not just the case of where you can't do, you go and teach. The fact is that Rob Yates has built multiple businesses, very successful ones, and then gone on to sell them and transitioned into coaching awesome clients, much like ourselves, as well as other companies and delegates of in some of the biggest companies in the world, in fact, internationally and locally. And that will then be followed by the Seed Investment Platform. So let me briefly introduce the Seed Investment Platform. What that is it's a platform that gives information to investment advisors like Pilot Insure to know and recommend the absolute best in breed and best blend of investment products that we would be able to advise or to introduce to you as the final user, as the actual retail investor. They've got a very scientific method and a wonderful ethos of how they do things, and that will be addressed to us by Adrian Gissing. Adrian, give us a big wave there, all the way from Seed down in Natal. Things have hopefully calmed down a bit there for you guys, and thank you very much for joining us today. And that will also be then led through, so that's the rest of it, how they identify the best portfolio building blocks and the building portfolios for you. And then all of that will be followed by an awesome Q&A. I would like to also just say that this whole webinar is interactive, so please don't hesitate to use the chat function, put your questions, comments, suggestions, maybe whatever you want to say, put it in there. If there's more information that you'd like to know about anything, ask it, put your contact details in, and we'll get hold of you if we can't answer it right away, or in the Q&A session at a later stage. So we look forward to being able to doing that for you. All right, and I just want to make sure that I've crossed all my T's and dotted my I's. I certainly have. And without much more from me, I'm going to hand over to Frans to introduce our Pilot Insure Wealth offering. Frans, over to you.
Thanks, David, and good afternoon, everyone. Great to have you here. I think it's always amazing, especially in the start of a new process and start of something fresh, when you see all the opportunity ahead of you, much like in any business that you tackle. You start with big hopes, big dreams. After sometimes, well, in this case, about 2 years worth of planning. So it's really great to get to this point where we can actually present our ideas to you and see where we're going to really lead this business forward. So maybe just a little bit of backstory on Pilot Insure. I'm sure most of you are quite familiar with us. If you aren't, I started the business just over 10 years ago where we 100% focused on insurance, hence the name Pilot Insure. And we've been extremely successful throughout the years, really pushing the boundaries as far as insurance goes, with all these coin words like loss of license, etc., and getting pricing down. And, we've done a lot of work in the back end on that, which I'm extremely proud of. But as time goes on and as one evolves, as yourself and as a business, and definitely, as our sector of aviation has evolved and is continuing evolving, we also change. And this change always comes from lessons that we've learned, and things that we feel are important next steps. And how do we not only grow as a business, but how do we grow our value offering to our clients, especially our existing clients, but also new potential clients. And case in point, exactly where you guys are sitting right now is where we need to be making very drastic and serious life decisions. Now, I understand that you must have been in the last couple of months or maybe even year would have been bombarded with all kinds of ideas and all kinds of product sets and product solutions, and do it this way, do it that way. And I think the truth is, there aren't really any right or wrong answers. I think the truth is you've got to do your own research, do as much fundamental research as you possibly can, and then decide what you want to do at the end of the day. Now, what we're about to discuss and talk to you about, and share this idea and vision, which we've tested on a few clients, is quite different. It's not your standard, run-of-the-mill ABC brokers that is going to come at you with, almost want to say a pre-made up solution of 2 or 3 different types of funds, or 2 or 3 different ways that they say, no, this is the best thing to do with your money. We do it completely differently. So we look at you as an individual, and then say, okay, for you as a person, not only within our small realm of financial services, but as a whole, what is it that you need to do to achieve whatever those goals are, and especially whatever life stage you're in. And I'm going to briefly run through this, and then maybe look at a couple of examples, or as I go on, we can talk about it. And please, if you have any questions as I go, pop them in. Very happy to answer them. So you'll notice that top left-hand side there. Hopefully, if you guys are on a PC, you'll be able to see it nicely. If you're on a phone, maybe put on the extra set of glasses. The top left, Pilot Invest. So that, I would say, is really your vanilla type of products. So that's where we look at local and offshore funds, and we search fund managers, which might be quite unique because we, as an independent business, we don't have 1 or 2 preferred suppliers. We really go to the entire market. So, that might be a bit different. And advice to tailor needs, clean slate with each client, yada, yada, yada. So that's, what I would say is the generic run-of-the-mill advice. And to give you an idea of how, I almost want to say, simple it is to find all that information, unless, of course, you use specialists in that approach, like what we do, is, Derek started working with us, I think it was about 5 or 6 months ago, and just from all the webinars and information that was thrown at you guys, he could already do the job. There wasn't really much that was super interesting or challenging for him starting out, and that actually really made me think that I was on the right track with doing this, because what else is out there? The conversation has been, this is the amount of lump sum you're going to get, this is what the tax looks like around it, and you can choose, do you want to take all the money, pay tax, do you want to take portions, not pay tax, preserve funds, etc., etc. But surely there's got to be more out there. There's got to be more things than just those, 2 or 3 options, and what else you can do. So of course there is. We've got other legs to the business. Steady Climb is the one, the finance part, and the Pilot headquarters. So Steady Climb really focuses on that question. So what if we took a different scenario and went to look at the opportunity of business? What if we went and said, would that money not be better spent going buying a business? And and I think one of the questions I got quite often was, and something maybe that we've seen through this whole pandemic, is the transferability of skills in aviation to different types of sectors or to different jobs. Now, I know because I've been working in aviation for over 10 years and I literally know hundreds of pilots. I know that you absolutely have skills that are transferable. You've picked up managerial skills, you've picked up all kinds of skills along the way that you can transfer into almost any type of job, really. But what we're seeing happening is that the you know generic companies aren't accepting that for whatever reason it is. So how do we go and we take those skill set? How do we hone it? How do we get hold your hand through the process and start the conversation of why don't we just buy a business? Why don't we maybe a startup? That idea you have. I know many guys started small little businesses during this time. We definitely got involved through, which was also called the Steady Climb Initiative, helping out there. But what if that's your reality? So obviously with that we've went and built a full team of experts around that, from legal to mentoring, which is extremely important. That's why we've got Rob here, because you can't go into anything like that. Well, you can go at it alone, but I can tell you from personal experience, going at it alone makes something that can take 6 months turn into a 10-year project. So it's really important to have that mentorship and figuring out what is it that makes you tick. What next for you. The finance side, tax, financing of assets, drawing up of business plans and really everything around a business. So that's, from a startup's point of view, what does that look like? What do you need? Cash flow, etc. What is your marketing plan? Your SWOT analysis? What's the competitors doing, etc., etc. So just a real proper business plan, and obviously very similar if the decision is later on to purchase a business and go it that way. And those are the kind of things that of course you can download a couple of books and listen to them or do some worksheets and run through it, but it's way better and easier and more efficient using someone that that's been there and done that to do it for you. And then Pilot Headquarters, which is our life insurance and loss of license for the career guys. And then all the other services, medical aid, short-term for company, personal insurance, group insurance, pension funds, providence for last will, testament, estates. Now, all these things are very important and they're all intertwined with each other. Because if you are the guy that says, actually, I can, grow my financial well-being and my assets 10 times, 20 times by buying an existing business that's been going for 10 years, and you really just need to show up in the morning to make it work and to generate an income. Well, then you're going to need all of these things. You need someone that you can trust and that's been there to advise you, someone that can really hold your hand through that process. So it's very different to the norm. We definitely not going to go and say, put all your eggs in one basket, do everything in a generic fashion. More often than not, you'll do a bit of both, but that really depends from person to person. And an example that we ran through a couple of times in the last 2 weeks with some of our clients, some of your colleagues, is take a couple of percentage points, 20%, 30%. Again, it's all going to depend on the type of business you want to get into, the size of that business, etc. But take a portion of that, go that way, but still keep the rest of the money in, I would almost want to say, your generic types of investments. And then obviously the big question around tax, taking out all the money, paying your 36% tax. What does that look like? For a lot of guys, that makes complete sense to do it. For others, it makes absolutely no sense to do it whatsoever. So it really is a completely individualized skill set. But what I'm most important or most excited about is, having done all of this research, having put all these partners in place. So behind all of this, it's not just me or David or Natasha or Derek. We've got specialist partners that run, I want to say, almost every one of these divisions. And these are guys that we've used for the last 5 to 12 years. So they come with a track record, and if you've been around and in and around specifically business for a while, you'll know how difficult it is to find a great tax guy and find a great guy that can help you with your business plans, and how almost impossible it is to find someone to hold your hand through whatever stage that business is in, to really help you succeed and give you clarity and really make it work. And that's one of the things I'm probably most excited about, is partnering up with Rob Yates. Now, I know David gave a brief explanation or introduction earlier, but intros can only do much. What I can tell you is I've seen Rob do amazing things in businesses. I've seen him turn really good businesses into brilliant businesses, almost failing businesses into some of the most amazing structurally sound businesses. But sometimes a business just doesn't work, and I think that's the challenge you've got especially when it's a startup. The idea might be great for you and romantic, but the day you actually start operating, it could be something completely different, because you didn't have the 10 years, 15 years experience. You haven't taken those hard knocks and learned those lessons. That's exactly what we want to do. We want to be able to help and support you in that. So the top left hand side, that's pretty much what the industry is like. That's what the industry offers, really. That's what I'm assuming you guys have been told to do, or advised to do. I say it's wrong. I say that it's almost unethical to keep your eyes closed and just focus on one sector of what you can do, when there's so much more out there and so many more opportunities. So that's just a quick, brief overview. Of course, like I said earlier, if you guys have any questions, please ask those questions. Rob will talk to you a little bit more about that, and then also we've got an event that we're holding. Dave, did we say we're going to do 10 people?
20.
Yeah.
20. Okay, 20 people. So we're also going to be have an event. Obviously, this webinar is very short and it's very quick, and it's just going to stab at some of the points. But we will have a real event that we can get 20 people to. That's the max we're going to do. If we go over, we'll obviously have another one. But where we can spend an entire day with Rob, just figuring all of this out and what you actually want to be doing going forward. Rob, does that pretty much sum it up?
Yeah. Shall I jump in?
Well, yes, I think we've done introductions, and the guys have got a pretty good idea who you are. So, Rob, go for it.
Cool. Let me just share my screen very quickly. There we go. So my name's Rob Yates. I'm originally from the UK, as you can tell by the weird accident. No British and Irish Lions comments for at least the next 7 minutes, please, or anything else. Let's park rugby to one side. What is it that I do? Well, I help people using build successful, wealthy businesses for people who want an abundant life. And I think I'm talking right here, right now, to people who want an abundant life. Because I want to ask you for a second, why did you become a pilot? I think that's critical. Let's go and consider that. Because when you decided to become a pilot, you had very many opportunities in front of you. You could have maybe gone and got an MBA and gone and sat in one of those horrible cubicles in Santon somewhere and trapped yourself away for the rest of your days. Maybe you could set up a business, worked for one of your parents, done a whole number of things, but why did you become a pilot? And I'm going to guess is because you weren't happy with normal results produced by doing normal things. It's interesting. I told my mother-in-law the other day, oh, I'm going to be presenting to pilots with Pilot Insure. And she said, you know what, Rob, 3 years ago, I'd have put pilots, I never would have believed they would have been retrenched or had any of these things happen to them. And of course, you wouldn't have believed the same, and neither would I, because where you are today is simply not your fault. So I want you to consider, as we're going through this, is why did I become a pilot? You didn't become a pilot to get stuck. You didn't become a pilot to get broke. You didn't become a pilot for any of those reasons. You became a pilot for a certain reason. And I'm going to guess it's got something to do with wanting to have an abundant lifestyle. Now, you're going to make a once-in-a-lifetime decision, probably in the next week or 2 weeks. And I want you to consider that decision carefully. Are you going to go and make a Woolworths decision? But what I mean by that is if you go and buy a suit from Woolworths, it comes off the rack, you get one that just about fits you nicely, but it's not perfect. Or are you actually going to go and make a decision that's tailored to you? And that's why I'm delighted to be sharing this webinar with Adrian from Seed, because I believe that Seed offers probably the best tailored platform in South Africa for you to go and invest your money through. There's something more than that. When you invest money, it's not just about the numbers. It doesn't necessarily have to fit into an Excel spreadsheet perfectly. It's about the people. Do you trust these people who you're investing in? And I want to tell you something about Adrian. I've known Adrian for about 9 years. And Adrian and I haven't always seen eye to eye, and yet we always make an excuse to have a beer about 3 weeks afterwards. Adrian's a guy who, if I died, I know would drive from Durban to Joburg to come and look after my wife and kids and make sure that they are fine. He doesn't do that because he earns any money or do anything from it. He does it because he's a good guy who does the right thing. And frankly, if you're going to invest money, that's the sort of person you want to invest money through. Not some stock standard, off the rack Woolworths solution that somebody says, oh, look, this is what we offer and we'll tailor it to you. You want something that's tailored perfectly to you, your circumstances, and the protection of your loved ones for the rest of their days. That's who you're looking to invest with. But I want to ask you a question, because I'm going to guess by now that you've sat through a load of these what to do with your retrenchment package sort of webinars. And I want to ask you, are you getting real financial advice? Now, there's financial advice and then there's real financial advice. And so what I'm about to share with you comes from the World Bank on what they deem to be the 6 pillars of financial advice. And what I want you to do is go and check to ensure that the advice you've received up until the start of this webinar is real. And if it's not real, we have to explore the motivations of the person giving you the advice. So the 6 pillars of real financial advice are to insure yourself and your wealth and your family and everything else in case something bad happens, a horrendous car accident or whatever it may well be, the house burns down, so that if it all goes wrong, something's got your back. There's then traditional investments, which is part of what we're going to be talking about today. And it's 100% important that you have a large proportion of any money you have traditionally safely invested. There's then the concept of assets. And Franz and I were talking this morning, and I was telling him about my 7 Airbnb properties that I have in assets that will pay for themselves within 10 years. You need to be considering about that. There's then the thought around business and getting advice around business, and that could be the business of a career progression, or that could be the business of starting or growing a business as well. There's debt. You know that people who are debt-free grow their wealth 15 times faster than people who have debt. And then the last 6th is education. Understanding about what you're doing with your money, where it's going, why it's working like it is. And so if you're not getting a service that ticks all 6 of these boxes and informs you so you can make the best decision around all 6 of these boxes, you have to ask in whose best interest is the advice you are being given. The truth is that in this investment industry, everybody earns through commission. And the commission comes to them through things like insurance and investment. It's very hard to earn commission around growing a business. And so I want you to think really, really carefully about the motivations of who's giving advice and for what purpose. Now, I'm a unicorn in this. I own a business called We Get Outdoors. It probably says that on my screen just there, as well as Tetra Key, the coaching business. And I earn an hourly rate, which means I don't earn off commission. So if I give you some advice, I don't win and I don't lose in any way, shape or form. I tell you Adrian Giesing's a decent guy because he's a decent guy. He's a friend of mine. I don't tell you that because I'll earn some wonderful percentage off the back of what you choose to do with your money. I tell you Franz and David are the same because yet again, I earn an hourly rate. I don't have a horse in this race. So all of that being said, I can tell you I'm good, they can tell you I'm good, but what do my clients I have today say about me? So on Friday, when Franz said, hey, Rob, I don't want to present this. I want you to talk about you and what you do. I was like, oh my goodness me, what should I do? So I sent some emails out to some of my current clients, and the first 4 to reply, I'm going to share with you now. So the first is a senior Lutheran pastor, Dr. John Lemunyon. He says, I'm an insightful guide and coach, expert visionary, the friend you want, so on and so forth. You're clever and you can read about that. Next was Dave Rocket. Dave Rocket's a vice president of Amazon.com, and I helped him transition from moving from General Motors to Amazon, and then helped him get promoted to be a vice president of Amazon.com within 18 months. Then we have Rick Wong. Rick is the ex-chief marketing officer of Microsoft, and I was the second person that Rick called after his wife when Bill Gates said, Rick, you're retiring now. He's like, Rob, what should I do? And so we explored around, we found out what drove him and what motivated him. He wrote a book, and then he became a board member of Harley Davidson. And then the fourth client that took the time to come and get back to me is Paul Kufi. Paul had a career in Red Bull. He was actually a vice president of Red Bull until his life and his parents died in a horrific car accident, and he had to move back to Portland, Oregon, which was about, I don't know, 6 hours flight from Atlanta, where his office was in Red Bull, to go and look after his family. His career was in tatters. Paul worked with me and set up his own business, and now he has an amazing $1.2 million house just outside Portland. Oh, stunning place. So that's what my clients say about me. You know a bit about what I do, and I've given you some filters to go and judge what it is that makes great advice and what it is you should be thinking about. Because the truth is, you need to go and make a truly informed decision. Not only about what you do with the lump sum that you get when you get it, but how you're going to earn potentially for the next 10 to 20 years. This isn't just about chucking all your cash in one pot and waving goodbye to it till the age of 60, drawing a third as capital, and then maybe having 2/3 left that maybe if you invest 7 million might give you, I don't know, equivalent of 23 grand a month in today's terms if you want your money to keep growing. This is actually about how do I pay my bond and my kids' school fees in 5 years' time? Is there a way of growing money faster? And in particular, what is this that makes this, and how can I tailor my world to be unique to me? And so I want to give you an opportunity. And the opportunity is this Saturday, and it's spending a day with me and with Franz and David to go and look at building precise, clear direction about where it is you're going and what you're doing. Unpacking those drivers that took you to be a pilot in the past and saying, what are those that are going to allow me to excel into the future? Considering what your full financial needs are and how much of this money needs to be invested through seed, and then how much needs to be used to pay for the business of today, and then maybe the business of tomorrow as well. And we'll also go and look at wealth. We'll get some individual coaching sessions in there. And go and consider whatever debt you've got, how you can set about crushing that in the fastest possible way. Of course, some of you rightly would be interested in business, so we'll go through a simple business builder framework to give you some ideas where to go to next. By the end of the day, you'll start to feel like the old you again. Remember the version of you who drove to the airport wearing a shirt, on your way to go and fly your plane to whatever that destination was. There was a certain feeling and sensation of satisfaction that you had inside. At the end of this day on Saturday, you will feel like you again. You'll have a decisive action plan linked towards your abundant future and know exactly what it is you need to do and where it is you need to go to. So we've only got limited places. It's going to be in Joburg. There is a fee, but frankly, the fee's to ensure you turn up as opposed to us making loads of money from you. So it's very, very simply $500 rand, that is, not dollars, 500 rand for the first 10 people, and then $1,000 for the next 10 people after that for the day. Once you sign up, we'll let you know whereabouts in Joburg it is, and all you have to do to book into that to ensure that you get that perfect plan in place for this once-in-a-lifetime opportunity is just email the guys at Pilot Insure, info@pilotInsure.co.za, and say, I want in, and they'll get back to you immediately. So that's it from me, but I ask you to go and think about what it is you're being offered, and I seriously ask you to listen in depth to what it is my friend Adrian has to say, because I trust him with my wife and kids, and I'd encourage you to do the same. Thank you, guys.
Brilliant stuff. Thank you very much, Rob. And as we can see, that is definitely a holistic approach to a full and comprehensive financial plan. So now the other pillars, and which are extremely important, I'm going to be handing over to Adrian from Risk. Adrian, take it away, sir.
David and Franz, thank you for the opportunity to engage. It's great to see all of you guys. And Rob, thank you for those very kind words. You know, Rob and I have had a long and interesting journey together. And I got to tell you, I speak from experience. In my old life in the big corporate banking world, we used Rob and his partner Mark extensively with our various teams. And it's just success story after success story. So if you have any plans for Saturday the 31st, I suggest that you cancel them and make sure you get yourself booked onto that course of Rob. It will definitely, if not change your life, have a substantial impact on how you look at the world and some of the decisions that you make going forward. Guys, I want to talk to you a little bit about that first very boring pillar that Franz referred to, the traditional investment space, but also just to give you a sense of what it is that we do from a seed asset management perspective in the background, to allow David and Franz to sit with each one of you individually and put a bespoke portfolio together that talks to your needs, but with you and Franz and David having the assurance that the building blocks, the Lego blocks that they're using to build your piece of the puzzle has been researched, has been vetted, has had a proper due diligence process, and is true best of breed building blocks. But just before I get onto that, just a couple of ideas around the psychology of investment. So I would assume by that nature that you're all pilots, you are all fairly aggressively inclined towards a life attitude, as Rob rightly said, a certain sense of excitement and zest for life. But sometimes even the most adventurous people, when it comes to their money, can be very conservative. So it is all relative. And I think it's also very important to understand that aspect of your psychology. If you are a very conservative person, but you're 30 or 40 or even 50 years old, to understand that you've got a 20, 30, 40-year investment horizon, and that you should invest in an investment profile that's fairly aggressive because of that long time horizon to optimize the opportunity of what your investment can do for you over that time period. And I just want to show you a couple of slides, which is questions that we're getting a lot, particularly in these very turbulent times, where clients come to us and say, I don't want any risk. I don't want to see any red on my monthly investment statement. I just want nice, consistent growth. And yes, you can get that. And that's that gray bar at the bottom. It's the cash bar. And it will give you a return over time. Most likely inflation or slightly less than inflation is our experience of sitting in a very conservative cash investment over the long run. So we would really encourage you to have a good balance of risk assets to get that growth. And that's the yellow or orange line right at the top, which is your typical balance fund, which you would, as a South African, invest in for your retirement money. And you can see over a period of 20 years, the massive difference between the values of that end pot between a cash or a low equity investment, the blue line, and a high equity investment. And I haven't even put pure equities onto that slide. Another question that we get, particularly at the moment, is we've had that very sharp recovery in March last year. Markets came down 35%. Since then, the markets globally are up more than 90%. So we've seen a very sharp V-shaped recovery. And there's a lot of nervousness that maybe the markets are due for a correction. And many clients approach us with the question, should I exit the stock market and should I go sit in cash? And I like to show them this particular slide, which is a history of the all-share index, but it can literally be a history of any share index in the world. And it just shows you that over the last 60 years, 75% of the time, the all-share would have given you a positive return. And typically what happens in the year after a negative return, if we look back 2008, the global financial crisis, the JSE gave us a return of less than 20%. Look at what happened in 2009. It gave us a return of close to 30%. And so you can go back through each period in history where there's been a severe pullback or a bear market. And what you find is in the year or the year after that, you get a very, very strong recovery. And ultimately, as investors, we want that exposure and we want to stick to our long-term investment strategy. And this is the last slide I'm going to show you on investor psychology. But if you do what so many investors did in March last year, and that was exit the risky assets when the whole world was collapsing around COVID, and clients who went into cash and are still sitting in cash, wondering when they're going to enter back into the market, waiting for that pullback to happen again. If you just take 100,000 Rand and you've invested it for the last 10 years, that 100,000 would now be worth, let's call it 350,000. If you've tried to time the market and you've moved between equities and cash in and out on an ongoing basis, and you managed to miss the 5 best months on the JSE, your 100,000 would now be worth only 215,000. If you've missed the 10 best, you can see it's 150. And then very sadly, if you missed the best 20 months, which can so easily happen, you go into cash, the market keep on running. Now you're saying, I can't go in now because now the market's too expensive. And 2 years later, we've had one long bull market. You've missed it twice 20 months, you can actually have negative returns on that 100,000. So just a little bit of a backdrop on investor psychology. I'm not going to spend a lot of time on this slide. It's just to give you guys a sense of who we are at Seed Investments. So we are a multi-manager. We run 5 of our own funds, 3 local, offshore, and a feeder fund. And we're just about to launch our 6th fund, which will be a pure global equity fund. We are unashamedly ethical around what we do. We believe in best of breed solutions for our partners like Pilot Insure. And we've got a team of 13 investment professionals that sit in the background and sweat the hard stuff so that guys like Frans and David can come to you and offer you portfolios and solutions that you can have that peace of mind and that it's best of breed. So there's really 3 things that we're good at. If you look at the middle of the slide there, we do asset class valuations. So we will make a decision on whether we want to be in SA equities versus offshore or cash versus bonds, for example. We do manager research. So we look at all the fund managers in the market so that Frans and David don't have to spend time doing that. They can focus on you and your needs. And in terms of the 4 pillars of Pilot Insure, how they can best help you holistically, knowing that the investment piece is taken care of by us. And then lastly, we blend those 2 pieces to do proper portfolio construction bottom up. So I want to just give you a sense of the journey that you will go through with David and Frans on the traditional investment piece. We've developed this lovely F&A tool. It's a financial needs analysis tool that Frans and David will take you through. And it's going to capture your current asset base. It's going to capture your current contributions you're making to compulsory or discretionary investments. And then it's also going to ask you, what is it that you want to earn if you were to retire today after tax? We put all those inputs in and it will give you a graph like this. And if you can just focus on this middle graph, in this particular individual's case, the blue line there is his asset base. The red line is the liabilities of income drawdowns. And you can see that the way this person is invested, in all likelihood, their funds should last him through to 94, 93 years of age, if they stick to the investment strategy that we're going to recommend and in the investment solutions that we recommend. In all probability, that's going to be their long-term forecast. So that's the first sort of guiding tool that will start the journey. And then very importantly, this middle piece of how do we actually invest your money. And just to give you a sense of how difficult that piece could be. If you, for example, a 40-year-old, and we're going to show you an example around that just now, you need to invest for retirement, you're putting it in an RA, or maybe you're in a preservation fund, you are restricted by Regulation 28. I'm sure most of you know what that is. If you don't, it simply says that you can't have more than 30% of those funds offshore, and you can't have more than 75% in equities. So we want to invest you as aggressively as Reg 28 allows, which is typically a balanced fund solution. Now, there are currently 238 balanced funds listed in South Africa. So Frans and David will then need to go and sit and start with that universe of 238 funds, and through some process or methodology, whittle it down to the 3 or 4 or 5 solutions that they're going to put you into. And the reality is, if you look at how most financial advisors do it, or how most clients do their selection, they look at performance, look at last year's fund fact sheets, they look at the Raging Bull winners, and that kind of informs their decision of what fund manager they're going to use. And I like the analogy always there of sitting in peak traffic. We've all sat there, whether you're M2 in Joburg or in Cape Town. And we've all had that experience where you're sitting in the middle lane and the fast lane's moving like hell. And the moment you jump into the fast lane, it stops and the middle lane starts moving like hell. Now, investing in last year's best performing fund manager is a little bit like that. Often just as you make the jump, that's when that fund manager has a bit of a wobbly. And just a case in point, I won't share the fund manager's name. 1 year ago on the 31st of May, if you looked at this particular fund, you would see it's Q1 year to date. So that means it's in the top 25 percentile of all the funds, literally over all time periods. So that's on the 31st of May 2020. We look at the exact same funds a year later on the 31st of May 2021, and the pictures changed drastically. Why? The fund manager had a couple of calls that they got seriously wrong. They were positioned into underlying investments that were out of sync with the current market cycle, and the pictures changed. So it's not a great investment philosophy. Now, I'm going to take you through this very briefly. This is normally a session that we take our financial advisors through, and we spend an hour on this. So I certainly don't intend to do that. I just want to give you a sense of the seed manager research process and what we do. So this is Tawanda and his team sitting, and they will take that 238 balance funds and they'll put them through both quantitative and qualitative filters. They will look at the tangible impacts on those businesses, the people, the processes, as well as the intangibles. How much passion does that fund manager actually have for his job? We look at little things like that because it does make a difference at the end of the day. We actually meet with the managers. These are all the guys we've met in the last 3 months. We engage with them, we understand their thinking, what's happening in their teams, and we use all of that knowledge to build what I like to call a Lego box. So it's a selection of funds that, number one, has got good teams, that's got good processes, has got good long-term track records that they can generate alpha of outperformance after fees, because that's very important. yes, fees are important, but what's more important is what a manager deliver after fees. So we look at all of that and we use that then to build different portfolios, or we give this list of funds to Frans and to David. And we're saying, if your client's got a 2-year horizon, here's the tools to build an income solution. If your client's got a 5-year horizon, here's the tools to build a moderately aggressive multi-asset solution. If your clients want to go purely offshore, here's the tools to go and build it. So David and Frans can, with confidence, use those tools, knowing that the Seeds research process is sitting behind it. And for us, the proof is always in the pudding. Does this process work? So sticking with the balanced fund example, this would be our balanced fund solution, a blend of these 3 funds. And does it work? It's outperformed the average of those 238 funds 9 out of the last 10 years. And on a rolling 1-year basis since 2014, it outperforms 90% of the time. So yes, it works, because if we're able to give you, the investor, that extra 1%, that extra 2% year on year over 5 years, 10 years, 15, 20 years, you will fall on your back when you see what difference that makes and the end amount of money that's actually available to you as the investor. I want to just briefly show you a couple of examples of what it could look like. And you might find yourself in one of these categories. So here's Joe, a 40-year-old pilot, saving for retirement, but also got a little bit of extra money for discretionary investments. So on the compulsory side, saving for retirement, we'll put together a solution of 3 balance funds. And then on the discretionary side, we always advocate building an emergency pot of at least 3 months. And I know in your industry, it takes about 3 months for your income protection to kick in as well. So if you don't have that, that's always a first port of call. And that should be in something that's liquid, but that gives you at least inflation +1. And we like to use an income fund blend to give you that. And this blend that we use at the moment after fees will yield you about 5.5%. Now, those of you who've looked around will know money market will give you about 3.5 at the moment. The bank, depending on the horizon, you're willing to lock your money in somewhere around there or less. So at 5.5, we think you're getting 2% better than money market with minimal extra risk, and the money is available immediately. So that's your emergency pot. And then we're saying, because you're restricted on the amount you can take offshore on the compulsory side, we recommend that the balance of your discretionary funds then go directly offshore, either through a swap fund or externalize it through your million allowance. And of course, always maximize your 36,000 tax-free options every year for you and your family members. And then just a graph of what those solutions, investment solutions, would have done, the growth pot and the income pot versus inflation +1 over time. Because ultimately, we want to keep and grow your purchase power parity into the future. Just a moment to pause on this. This is a question we've been getting a lot recently. And it is now a good time to externalize my rents. And we've looked at it and we've had this discussion so many times. But if you think of purchase power parity, which is at bottom line, and I don't want to get too technical, we're not there because of the inherent risks in South Africa and the very slow growth rates that we're experiencing. However, fair value for us is probably about 1 standard deviation away from there. And where we're currently around 14, between 14 and 15, we add about 1 standard deviation from purchase power parity. And we're saying, even with the Rand going out now to 14.85, at these levels between 14 and 15, it's probably the best opportunity in the last 6 years we as South Africans have had to take money offshore. If you get your timing right and you do it at 13.85, absolutely fantastic. But if your aim is to have offshore exposure, our recommendation is don't wait until it gets back to 13.85, because it might never happen, or it might only happen in 5 years' time. So certainly, if you're looking to externalize funds, now is not a bad time to do that. And then a second scenario, maybe you are thinking of early retirement, or you're at the age now where, with all the turmoil that you guys find yourself in your industry, that you're going into retirement, or you can start a secondary business with the help of Robin and his team. Then you're going into a position where we create an income pot for you. So we take 3 years worth of income. We put that in that same solution. It gives you 5.5% yield at the moment. And for the balance, we give you a roughly 50% local growth exposure, 50% offshore exposure. And every year when David and Franz review your portfolio, if the growth pot had a good year, we'll harvest the growth from there. We'll top up your income pot. There's never been a bear market that lasted longer than 3 years. So 3 years worth of income should give you a deep enough, solid enough buffer and also act as your emergency fund. And then just again showing you what that would have done, that portfolio over the last couple of years versus CPI +1, and certainly a good outperformance. And then the last example I want to touch on, for those of you doing expat work or maybe flying, earning dollars or pounds or euros, or you're simply saying, listen, with all the risks locally, I want to externalize my investments and go purely offshore. We then put together, this is a very simple blend. Depending if you need to draw income, it will get a little bit more complex. We'll add an income and a growth pot in the offshore piece. But there we would put a very simple multi-asset global solution through Seed Global, and a true, one of the best, in my view, global quality managers, Fundsmith Equity, with a fantastic 17-year track record. We will blend those two funds to give you that long-term offshore growth exposure. And it's kind of a invest and forget solution that you can visit again 5 or 10 or 20 years down the line and harvest that growth. So that's really what we wanted to share from the Seed team's perspective. David and Franz, thanks again for the opportunity. If there's any questions, we're very happy to take them.
Excellent stuff. Thank you very much, Adrian. Yeah, I mean, just looking at those three different examples of people, you know, in different stages of their life and where they might be wanting to place their money and what kind of funds they'd be coming into contact with at this point is very important. And obviously that just shows you, I mean, there's no cookie cutter solution for any one person on this webinar. You know, there's something that has to be tailored 100% to all of you. So thank you very much. Thank you. I really appreciate that. All right, we're going to be going into the questions and answers section right now. I do have a question here, and it's directed at Franz. Franz, can you, just going back a little bit more to your presentation, in terms of going into business, you know, a question that we get asked a lot is, you know, what's the difference and what are the pros and cons of either starting up from scratch, maybe just financing a business all on your own and starting up from scratch, versus buying a going concern and making that work for you? What are some of the considerations you would advise us on?
Okay, so starting a business from scratch obviously means that you're really taking on maximum amount of risk of this business succeeding or not. And I would say, you know, starting out a business is probably where you really need someone like Rob to hold your hand through, you know, months before you actually start that business. So starting a business, you could do it with much less money, of course, because it's just an idea and it's not something you actually need to purchase. So you might need to purchase some stock and maybe rent a spot or whatever, depending on what type of business it is. Versus buying a going concern. Buying a going concern, the theory is that because it's a going concern, it's got a customer base. It probably has a loyal customer base in some sense, and you know, the trick is looking for an existing business that's has a couple of years worth of track record. So do you know almost, you know, what you can bank on happening, and then coming with fresh ideas, fresh motivation and energy. And again, someone like Rob to almost iron out the existing challenges within that business, and you know, just taking it to the next step. The upside, of course, of buying an existing business is you know more or less what to expect. So, which also means you can work out what your return on investment is, which means you can work out how long it's going to take you to through that business, make the money back that you paid for this business, where you sit in, I'd say, average 5-year period where you not only sit with the asset, but you've made the money back that you put into this asset. And that's if you just keep it the way it was when you bought it. That's not if you go and do something as simple as doubling the business in a 5-year period, which is, if you chose the right business to start with and you've got the right support, which we're talking about offering, shouldn't be too much of an issue. So that's fundamentally the two differences. The one, you're really out in the wild trying something completely new and different, which obviously can work. I mean, there's hundreds of thousands of people that are entrepreneurs, really, but there's a lot of skills that you probably need that as a 15-20 year career pilot you're not necessarily going to have right off the bat. So either way, you definitely going to need help achieving this, but let me stop, because I can talk about it for about 3 hours. I'm very passionate.
Absolutely. Thanks so much, Frans. There's another question here, and this is directed at Rob. Rob, in terms of your coaching process, would you say that it's a case of bringing people in and giving them tools and telling them exactly what to do, or is it quite different to that? And how is it different to that?
It is very different to that, because my approach is true coaching. So if I was to ask you for directions, which I suppose could be advice and guidance, right? If I was to ask you for directions, the question you'd have to ask me back before you could do that is to where? And so I can't really help people unless I know where it is that they're going to. So the starting point with all coaching is, where is it that you'd like to go to? How does that look, feel, and measure, importantly? And then around tailoring solutions to tread that path, or maybe climb that staircase to whatever that destination is that people want to go to. So there is standard operating procedures, there is standard processes and concepts to follow, but all of those have to be tailored like a suit to the end destination that a person wants to go to. And I guess that's really my superpower in life, is building a pathway that's unique to where somebody wishes to go to as an individual, as opposed to a one-size-fits-all hit and hope sort of version of coaching and instruction.
Excellent. I mean, as you say, absolutely true coaching. It's not telling people what to do, but rather eliciting the talent and the results out of the potential of that exact person. So that's really great. Thank you so much, Rob. I see there's another question here from Neil. Neil, let's take it away. Hi there. If taking retirement at age 50 and doing an asset swap offshore in a living annuity, what offshore funds would you recommend that have a low fee structure? I'm going to direct that one at you, Adrian. I mean, I know what I might say, but I think as the investment specialist here, tell us what your opinion is on that question.
Thank you, David. Yeah, I think it's always good as South Africans to diversify offshore firstly. We're only 0.4% of global GDP. We're less than 1% of the global investable instruments. So going offshore is always a great idea from a diversification perspective. I think we all understand the unique risks of our beautiful country as well, especially in view of the events over the last 2 weeks. So going offshore, one then want to get growth. I think that's the first point I would like to make. It's pointless going offshore and going into a low risk environment, because just by the virtue of the currency fluctuations, you're taking immense risk by going offshore. In fact, there's very little from a risk profile difference between cash and equity going offshore because of the rand's volatility. So when you do go offshore, we would then recommend that you go into growth assets. And that's typically a multi-asset solution that consists of bonds, equity, global property, maybe some alternative products, and then but perhaps also a good chunk of pure global equity. So Obviously, the seed funds would be, Global Fund would be one that we would want to recommend in that space from a multi-asset perspective. It is a fairly unique fund. I know I'm biased in that sense, but we do test it regularly. We test our parameters there. And it's a nice blending fund because it gives you geographical exposure. It gives you multi-asset exposure. We like to blend that in with a good quality manager like a fundsmith as a base for an offshore portfolio. And then depending on your particular needs and nuances, if 50 years old, but you feel you want to be aggressive, maybe you believe that the current growth trend is going to continue for the foreseeable future, you want to capture a bit more tech, we might bring something like the Baillie Gifford Worldwide Long-Term Growth Fund in. We might bring something like the Baillie Gifford Managed Fund in. If you need to draw income offshore, then we'll bring in some low risk income funds, but try to give you the best yield. Maybe something like the Coronation Global Strategic Income, if it's dollar, if it's euro or pound based, we'll advise those appropriate funds. So again, we truly, similar to Rob, we like to build bespoke portfolios depending on your risk profile, your needs, your time horizon, and what you ultimately want to achieve with your portfolio. So we've identified the best of breed funds. And like I said, those to my mind are the Lego blocks. With those Lego blocks, we can literally build a million different portfolios, but you have the surety that the underlying funds are the best of breed funds, so you can blend them with confidence. And just on the costing side, we're quite agnostic between passive and active, high or low cost. We look at fund managers that's got a track record after time, long-term track record after cost to generate alpha. So to outperform the benchmark, outperform the market after fees. And where we can't find those managers, we then would use passive building blocks, very low cost passive building blocks. But where we can find those good quality managers that deliver after fee returns, we will allocate to an active manager.
Thank you very much, Adrian. I hope that answers your question. I did hear some actual names of funds being dropped there, which I 100% agree with. But obviously, as Adrian says, I mean, no one set of funds is going to suit any one person. So the best thing for us to do is to actually have a sit down and actually listen to what your needs are and where you're at, and to see which of those funds will suit you absolutely perfectly. I see there's a question again, Neil, in terms of the fee structure. That is obviously to be negotiated on each transaction, and that is that's a financial advisor and client discussion. And I just want to say, from Pilot Insure's side, and ever since the COVID pandemic has hit, we've obviously given a massive discount on all of our fees in terms of even commissions on risk and investment business. So, but that is a discussion that we can have and take forward, no problem. All right, a very quick hiatus I would like to just acknowledge is Carmen and Jade. Carmen is from Seed, and I just wanted to say thank you very much to her for helping with the marketing and the branding of the whole presentation. Without you, it wouldn't have looked this good. So thank you very much, Carmen. I think everyone can join me in an accolade there. And Jade Oates as well from 4D, who's actually been very instrumental in joining Pilot Insure with the guys at Seed and Rob from Get Outdoors and his coaching business. So thank you very much there to you guys. I'd just like to give you guys the accolades that you deserve. Thank you so much. All right, just going back, I see that Craig also had a question. Craig asked what minimums there are for people investing in some of these options. And Adrian, I mean, I see you've given an answer there, and obviously the minimums roughly are anything, sort of $5,000 as a lump sum for sub minimums on most platforms, and obviously it does depend, which funds we use. There are some US dollar funds that only take $50,000 as a minimum, but most of the ones that Seed will recommend are generally around the $5,000 mark. And then as we've said, as in fact, the discussions I've had with Rob in the past as well about feeder funds in South Africa, we actually have the privilege of being able to access something like the BCI feeder, Fundsmith feeder fund, which is where you're investing in stocks like PayPal and Amazon and Alphabet and all those great companies for as little as R1,000 a month. So there's a whole range of access to investments that we have. So fantastic. All right. Any one question, and maybe Vincent Harford can also weigh in here a bit. You're not obligated to do so, but what Adrian also spoke about purchase power parity on the rand dollar at the moment, and indicated that now is as good a time as it has been in the past to externalize funds from South Africa to the US. I'm gonna first ask Adrian, just give us 30 seconds on why that is now, and then Vincent, optionally, if you want to weigh in there. Vincent, let me just give you a bit of background. Does quite a lot. Well, his main business is actually sending funds offshore for clients. So if you've seen any trends around this at the moment, just tell us a little bit more about that. So Adrian, you go right ahead and tell us again.
Thank you, David. And maybe just to take one step back on that question, and that is it a good time to go offshore, yes or no? Again, it depends on you as an individual. If you have already externalized 70% of your wealth, it is sitting offshore, and you've now got a lump sum of 200,000-300,000 you're thinking of taking offshore, I think you've got a bit more luxury to try and wait for a favorable exchange rate. If you're sitting 100% invested in South Africa, and part of your long-term strategy after discussion with David and Francis to externalize some of your funds, I think at the current levels, it's a great opportunity to start making some diversification offshore. So again, it is a case-by-case basis. But, 2 months ago, yes, we could take money offshore at 13.85. At the moment, we're taking it out at a rand more, 14.85. But if you look at that long-term graph that I've showed you, the last time we were this close to purchase power parity was at the end of 2016 when Cyril Ramaphosa came in as president. There is obviously a probability that the rand will strengthen further from here, but we would argue that on a balance of probability, the rand is more likely to weaken from these levels than it is to strengthen substantially. So if you are thinking to externalize anywhere around the current levels, if you can get closer to 14.50, I think you're doing great. But between 14 and 15 is sort of that one standard deviation away, which is where we should be trading given our inherent systematic risks in our country and our growth numbers.
Thank you for the opportunity, David. Yes, my name is Vincent. I'm from Currency Assist, and we specialize in international money transfers to or from South Africa. So I would like to agree with Adrian there. It's quite risky to make a judgment call on where the rand is going to go. At this stage, it's not rand strength, it's definitely dollar weakness. Other way around, it's dollar weakness that is strength that is causing the rand to weaken a little bit at the moment. If you've got a crystal ball to make the correct projections on where the rand is going to go, I would like to have that as well, please. So we might see a swing and a roundabout between the 14 and 15 rand region, but I would like to agree with Adrian there and say that this is now the best opportunity to move your funds. There is a definite increase trend in South Africans moving their funds offshore or part of it. So at the end of the day, if you have invested and you want to bring that funds back, it is easy to do so as well. There's nothing that withholds you from bringing your money back. Again, Currency Assist can assist with any movement of funds to or from South Africa, and also to help you to utilize your foreign investment allowance as well as your single discretionary allowance. Thank you for the opportunity, David.
Thank you, Vincent. And yeah, absolutely. I mean, Vincent is one of the service providers that we use in order to externalize rands into foreign currency. All right. And I think lastly, France, do you want to wrap up just by giving a bit of a last wrap-up summary for us to end off, please, France.
So eloquently put, David. So
Beautiful.
eloquently put. Okay, so no, I think I'm happy that we got the opportunity to share all of this with you guys and where our heads at, and more about the more holistic advice about what exactly it is that is possible for you. That it's not a cookie cutter. We've got various ideas and various different types of avenues. I mean, we've got the entire investment market to work with, and then also, throwing a bit of a spanner in the works for the guys who want more upside in business, really. So just again, a reminder about that event with Rob for the one-day event. We literally couldn't do it any other way. And to give you an idea, I mean, I've probably spent over 200,000 Rand myself more on attending events like that. And each one you do, you learn something new. You gain more perspective of yourself. Even if you walk away from that and you're like, nah, we're going to business with these oaks, I promise you will learn probably more about yourself and what your headspace is like within the business world than you've ever known previously. So just again, a big punt. Let's make it full. Let's get at least 20 guys there at the event. If you want to come, bring a buddy with, one of your colleagues. And Dave, what are we going to do when you make this get this link available to everyone to watch for the guys that couldn't make it?
Absolutely. The session has been recorded. I see we've actually got one or two guys jumping on now, probably from different time zones. So a little bit late, but we are ending the session soon. But absolutely, we will record the session and we can make it shareable to the rest of, to anyone who's interested and to anyone who you guys think would benefit massively from this discussion.
No, absolutely. But I think that's it. Thanks, Dave, Rob, Arja, and everyone who was involved in putting this together. I love it, and I think we've done an amazing job at presenting what our ideas are. And again, just thank you guys for joining in, giving us the time, spending an hour with us with some different alternative ideas, and again, just a big push. Let's get all together on the Saturday, go through some ideas that Rob has. I'm really excited. I mean, I'm sure I'm going to learn a lot from it as well. And yeah, hope to see you guys there. And it's very easy. If you want to reach out, email address is just info@pilotinsure.co.za. Just pop us a mail. We'll send you all the details, where it's going to be, etc., etc. And like I said, I think we'll probably end up being full, probably be more than 20. But if that happens, we will just have another one. And if we get quite a lot of responses from guys all over the country, we can either do other events in person in different parts of South Africa, because we are very much a national business, or maybe look at doing some Zoom type of things again. But that's it. Thanks again, guys. Thanks for joining us. We really appreciate it, and we hope you reach out and see how we can give you a bit more advice that's not really the standard thing out there.